We can start the presentation. So I will first very quickly give you the highlights, and then we go into detail on the different topics, 2022, 2023, how we see the evolution in the market, and of course, an outlook and a view on our ESG strategy. Highlights of 2023, obviously a good result, 4.45 euros EPRA EPS per share. This is 9% year on year. Taking into account, of course, the weighted average number of shares has increased by 11%, so that's quite significant. And then, of course, there is an exceptional one-off 45 euro cent, which is mainly linked to the FBI status we obtained for 21 and 22. And we will propose a dividend close to 80% payout of 3.74 euros, which is 2% up. And then the exceptional 36 cents from the one-offs. We're very proud to tell you that for the first quarter in a row, our occupancy rate stands at 100%. That's nice. But as you know, since 2018, we have been above 99%, which gives you a good idea of the quality of our portfolio. Like for like, rental growth is up 7%, 6% is linked to indexation and inflation, and 1% is linked to renegotiation. As you know, there's every year roughly 10% of our leases that has a break date. It's very important to understand also that a lot of those break dates, close to 50%, do not give us the opportunity to increase the rent. A lot of the break dates are just unilateral from the tenant. So basically, he doesn't break because he wants to keep the lower rent, but we are not able to increase the rent because it's a unilateral break date. So 1% comes from the renegotiation and 6% from indexation. EPRA LTV stands at an all-time low, 33%, and our net debt on EBITDA stands at 6.8, and a healthy EPRA NTA of 74. We now have a premium roughly of 3-4%. I've seen that the results are well received by the market this morning. We're now up again 3%, so I think we are 6% above NTA right now. Successful equity issues, both by the optional dividend as by the ABB, in total 147 million that we raised over 23, and both were done close to the NTA, so that's quite nice. Financing is under control, 7-year average duration, 97% hedge ratio, and a stable cost of debt at 2.3%, and still 280 million available for new projects. And I think this is sometimes not that well perceived or received by the market or understood by the market. That is the solid portfolio valuation. And I will come back on that later in the presentation. But if we look on the last quarter, our portfolio valuation is up 1.4%. And if we look at the full year, we're up 1.4%. So I will come back on the peak to true. What has been the impact of the crisis we have had over the last 18 months? And you will see that it is very limited within Montea, obviously linked to the fact that the valuation at the start of the crisis was very prudent and conservative. Portfolio growth, 79 million over the year. I will come back on that. It's some of these are projects, Tongeren, Vilvoorde, and one acquisition in Belgium in Machelen, a building of FedEx. I will come back on that later on also. And an outlook for 24-25, 4.55 euros for EPS guidance for this year, and 4.65 for next year. Obviously, not including the one-offs we hope to receive when we get the recognition for 23 and 24 for the FBA status. This would mean another 20 cents in 24 and roughly another 17 cents in 25. So this would mean if we would integrate them, we would go to 4.75 in 24 and 4.82 in 25. Again, these are just the highlights. I will come back on these points in detail in the presentation. We think it is important to also start, when we talk about growth and future growth, that we first take a look at the market. What do we see today in the market? We have expressed this ambition to grow the gross lettable area with 30% over the next 2 years. So that's quite ambitious. But this is not just a dream. This is really based on what we see in the market today. Just some figures to give you a bit of a feeling on the markets we operate in today. We see in Belgium an average vacancy rate today of 2.5% and an amazing rent increase of 13% over the last year. On the 4 markets we're active, this is the most significant rent increase. Somebody with a bit of history in our sector would say, yes, of course, because you have been lagging behind for so many years that it's logical that the biggest increase is in Belgium. But for the first year, I've been with a lot of you on calls and on meetings and in the past, when we talked about rent increases, I always said, this is the monster of Loch Ness. Everybody talks about it, but nobody has seen it. Well, it lives, it exists, and it is there. 13% in Flanders. That is not just one deal. This is just significant in all deals that we see. The difference is there. If we look at Holland, same very low average vacancy, but moderate prime rent increases. Why? Because they already had them in 22. So the impact in 23 was much lower, but also very low vacancy in the market. France, 3.5%, mainly in Ile-de-France, which is quite amazing, 7%, but in the other regions, very low. And also more than 10% rent increase on the prime rents in the core markets in France. And then Germany, 3% vacancy and 5% average prime rent increases on the 8 top markets. So I think this is clearly a trend, very low vacancies in all countries and significant rental increases all over the place. Now, I think this is also a very interesting and new slide to show you that we believe that demand will remain very high in all of our markets. If I look at the left-hand graph, if you look at, so what you see is the e-commerce sales per person in every country compared to the stock, so the number of square meters for logistics in every country. Of course, you have a total outlier, which is the US. But if we look at Europe, we see that e-commerce per capita, here, France, Germany, Belgium, the Netherlands, we all have approximately, let's say, roughly 1,500 euros sales per person per year via e-commerce. So all 4 markets have the same figure. What we see there is, of course, that Holland has a much higher percentage in square meters than the other countries. And this is, of course, because they are managing all our logistics, all of Belgian logistics from the Dutch border. And this is what you see here clearly. They have the same consumption as we have. They just have more square meters due to the fact that they also work for Germany and they also work for Belgium. So that's quite an interesting slide. And if we look at the growth of the e-commerce sector as a share of the total retail sector, we always set the final goal, or if we compare ourselves to the US and the UK, it should be around 25%. So of all retail sales, 25% should be e-commerce or will become e-commerce. Today, we're not there yet. We're at 16-17%. There's a slowdown after the hike due to Corona, but the trend is still growing. So we think that the demand for industrial property will remain very high. And this is what you also see when you look at inventories. Sorry for that. So changes in inventories, yes, of course, they are coming down compared to what we've seen during Corona, but the trend is still an increase. And if we look at what logistics occupiers ask, we see that 2 out of 3 think that they will expand in 24. So demand remains high. So on the right-hand side, you see those who want extra square meters, and on the left-hand side, you see who wants to give back square meters. So there you clearly see that there is much more demand than people who want to reduce their square meters. And if we put that together and we look at the offer in the market, we see that in all our 4 countries, there is clearly an undersupply. Roughly for every 10,000 square meters demand, there is only 7,000 square meters offered in Holland. In Belgium, it's only 1/3. So if we look at take-up figures coming down, this is not linked to lack of demand. It's linked to lack of new offer. That's the only reason why we see a slowdown in the take-up today. It's due to the undersupply. And this is structural because there is no new land available. There is no new offer. It's very difficult. If I look at the next slide, regulation is getting more and more stringent. Again, these are all the countries, the dark blue, where we are active. We see that Holland has become the most stringent country, and this is a study by Green Street, has become the most stringent country to get new building permits. It's amazing. I mean, you remember when we were talking about this 3 years ago or 4 years ago, we as Belgians, we said, yeah, Holland, that's the Mecca, that's the holy country. They understood how you get building permits in 3 months. If you look now at Belgium compared to Holland, I can tell you Belgium has not become more easy to get your permit. It's really Holland that has become really, really difficult to get new permits. And there it is important to mention that 75% of our land bank today, we have a land bank of 2.2 million square meters, 75% is greyfield and brownfield. So mainly sites that already had an industrial use before we bought them. And that's basically the only plots of land where it's still possible to get building permits because they already had CO2 emissions. They already have the power supply, which would be much more difficult to get on greenfield development. So that's why we feel comfortable that we will be able to continue the growth story. Now, looking into Montea and where we stand today, this is my feel-good slide. If you look back at where we started in 26, portfolio increased by 23 times. So that's quite nice. But if we look at 2023, there is some kind of disappointment. Let's be honest. There's only 79 million capex. That's a bit disappointing, in my opinion. Should have been more. We would have loved it to be more. Now, if we look back at the summer of 22, when the market changed, we gave you the message, we will stop standing investments. Buyers are dreaming, sellers are hoping. There is no equilibrium anymore. Standing investments will become close to impossible. We will have to focus on in-house developments. And that took quite some time to get all the permits, to get everything aligned, to really get this land bank into motion. It took us roughly a year, and that's why in the third quarter of 23, we announced this growth plan. And we feel really comfortable that this year we will catch up. We will do not the 200 million we promise every year, but we will do at least 260. 200 of that will be in-house developments. But there will also be room for standing investments. We see the market opening up. We see new opportunities. We see a new equilibrium. This is also to do with the fact that the 7% that we put a bar for our in-house developments, we can lower that bar for standing investments due to financing, having a better view on the cost of financing today than, let's say, a year ago. So we really feel comfortable that the 260 million we announced for this year is really achievable. Again, the things we did last year, we're proud of them. Tongeren, Machelen, together with our partner Cordeel, and then of course the FedEx building. And the land bank today stands at 2.2 million square meters. 1.5 million is bought. 700 is under control, which is mainly under option. All of it is zoned for logistic and industrial use. So there's no land bank of agricultural land where we hope to get a rezoning. That's not the case. It's all zoned. It will bring us additional gross lettable area of 1.1 million square meters. So that's roughly more than 50% of our existing portfolio. And again, 75% is grey and brownfield. The 1.5 million, so the part we acquired is valued today at 300 million. That's roughly 200 euros per square meter. But 76% of that is yielding land bank. Remember, it's a parking lot. It's older buildings that we bought to demolish them at the end of the lease. So 76% of that is yielding roughly at 6%. So it's not that weight. It's really something that has its own, that is generating income for the EPS. These are some of the bigger plots in Tongeren, in France, in Germany, in Holland, in every country. And I would also like to mention, because people sometimes ask us, aren't you lacking a bit behind in France? Well, if we develop the 1 million square meters that are all in Belgium and Holland today, the 1 million we are going to do over the next 2 years, and suppose we would not add any new land to the land bank, then France would at that moment be the largest part. More than 50% of the land bank would be in France by then. So we really believe that we can step up in development in France. The 1 million we will bring into development. That's roughly 600,000 square meters of gross lettable area we will be able to add. 65% of that is on grey and brownfield. And as we already mentioned in the Q3 figures, the net initial costs we will be able to obtain is 7%. And none of this will be done speculatively. The idea is based on pre-let. We see an average development margin of 30% on these developments. And of course, if we take out all this land, we will have a remaining part of 1.4 million square meters of land bank. And we are very, very detailed on that. So we gave you already in the Q3 figures. This is for us a dynamic list. So we will be able to add next trimester other plots that we will buy, where we will have permits that are not included in this list. This is a dynamic list, but it's really something where we are very proud of, and we will give you all the information, because this is really the target where the teams in Belgium and Holland are focused on to realize by the end of next year. Again, this is the projects we are envisioning. Amsterdam, pre-let and permit in place, so under construction. Waddinxveen also under construction. Tiel, an important part of that, roughly 50% is pre-let to Intergamma, but we are now waiting for the permits that we hope to get in the next weeks. And then Born, there we have the permit, but we are in negotiation with different tenants. So we hope to bring that also in execution later on this year. In Belgium, we have Bluegate, where we have now started to work for the second building. It's 100% pre-let. There will be an announcement on who those tenants are when they are ready to reveal themselves, but it's 100% pre-let and construction has started. Vorst, that's the Deleuze home shopping center, permits in place, construction has started, will be delivered in the last quarter of this year. Grimbergen is the project we have together with WDP, 50-50. Lummen, we have the permit, but we are in negotiation with several candidates. And Tongeren is an ongoing project where this will also be fully developed by the end of next year. All the permits are in place, and we start every new phase once we have new tenants. Growth is nice, but it has to be profitable growth. And I think we will be able to bring profitable growth to the market. Let's look at last year and compare to 2022. And then we see that the net rental income is up by 17%. That's 7% like for like and 10% out of rental income from new projects. Another important figure I would like to add is the overhead expenses went up by 50%. That's not linked to me, not linked to Els. It's fully linked to Herman and Leon. No. It is basically really in the country teams and in the corporate services. Our aim is we will now be this year for 2024. We foresee an operational margin of 87.5. That has to be the all-time low. We have to catch up. We will not let people go, but we will increase the income due to all these investments we do. So the idea is to go back to the 90% operational margin in the next years. So this was a planned expansion. It's really preparing the future. Maybe also important, of course, is the FBI recognition, which went from in 2022 from -5 million taxes to +5 million in 2023. Of course, has a significant impact on the result. 33% EPRA result. The EPRA result is up 33%. And if we exclude the one-offs being the FBI recognition and the solar panels where we took a provision in Flanders, then it's still 21% up. And if we look at it per share, it's 4.90 euro, including the one-offs, and 4.45, excluding the one-offs. Looking at the portfolio, as roughly every year, 9% of the leases have a break date. It's an all-time average we have year on year. We already know that 53% of that is extended or relet today. So that's quite under control. And as already mentioned, 100% occupancy today with an average above 99% since 2018. So that's quite impressive figures. Looking at the inflation and the indexation, as said, 6.8% is the like-for-like rental growth over the year. 5.5% comes from indexation and 1.3% comes from renegotiation. The strong portfolio KPIs, in our opinion, are really linked to the fact that we have been monitoring the portfolio for a very long time. When I started with Montea in 2010, we had 20 assets. In the next 4 years, we sold 17 of them, and we used the money to invest in new state-of-the-art buildings. That's why in the first 5 years, the growth was not that impressive. But still in the KPIs today, 10 years later, you see the huge impact of that. 6.5% residual lease term, 100% occupancy, 5.06 EPRA net initial yield. So quite impressive KPIs all over the portfolio. We compare to our peers. Some of the peers are, of course, Argan, Intervest, Segro, WDP. We see that in Belgium, we still have a quite high net initial yield. In Holland, it's a bit lower compared to the peers, but this is also linked to the fact that our Dutch portfolio has an average duration of close to 10 years. So that's why this is a very good net initial yield. And in France, we are amongst the higher net initial yields. So basically, for the first trimester, we can again give some yield compression. It's only 1 basis point, but still, it's there. It's not expansion. And over the full year, we see a total yield expansion of 23 basis points. And it is, of course, a very interesting slide where I will give some more flavor. Some of you have already seen it in a Q3. But basically, what you see here, the green is the like-for-like portfolio fair value evaluation. And that is, of course, always the function of 2 main variables, which is the ERV increase over the last 18 months, but also the yield expansion. So what you see here is, of course, here the sun was still shining, the yield was still compressing, yield compression. And then as of Q3 2022, yield was increasing. Of course, last trimester of 22 was the worst, has been stabilizing over 2023, but fully compensated or close to fully compensated due to the ERV increases we had trimester after trimester. And so if you look at the peak of Q2 2022 and you compare it 1 year later, you see that the total portfolio evaluation, the like-for-like evaluation of Montea is only down 1%. So that's really, I mean, we think this is quite impressive, the way we managed this crisis. It says a lot about the conservative valuation at the start, but it also shows that this year already we can have again like-for-like portfolio increase of 1.4% over the last year. There is still some potential to increase the rents, as they are today at an all-time low, 6% under rented. We compare it here to 2014. So basically, Montea always had an occupancy rate of, let's say, 95, 96%, but we were able to catch 105% of the ERV. So basically, we were also at 100% of the rental income. Today, it's the other way around. We have 100% occupation, but we only catch 94% of the ERV. So there is some potential there. If you look at Q4, the 3% ERV increase, we were kind of close to catching up all of it. So we see this, you can see this as a negative side, but you can also see it as a potential upside for the portfolio. Based on the ABB of Q4, we have an all-time low net debt on EBITDA of only 6.8, and our LTV is also at an all-time low of 33.5. Let's not forget, we didn't need the crisis to remind us that low LTVs were important. For the last 5 years, we have had an LTV below 40%. Already mentioned the cost ratio. The EPRA cost ratio is up 11.8% and will continue to go up this year to 12.5%, but with the ambition to bring it down again towards 10% in the upcoming years. Looking at the financing, 2/3 of our financing today are bonds, 1/3 are credit lines. Maturity of both debt as the hedging is roughly 7%, and you get the maturity credit lines and bonds on the right-hand graph. No big changes there. Current cost of our debt stands at 2.3%. 97% of that is hedged, mainly fixed rate debt, and a set 7 years average hedging maturity. All this brings us to the outlook for the upcoming years. As for 2024, as already mentioned, 4.55 is the EPRA EPS guidance we give, with a potential upside of 0.20 linked to the FBI status, which would bring us to 3.60 or 3.76, 78, including the one-off. 260 million, so above the 200 million we set as a yearly target, and inflation estimate 2.1%. 25, 4.65, again, excluding the one-off. 200 million of investments and an inflation estimate of 2.1%. And if we look beyond 2025, we think that given the quality of the portfolio, the occupancy should remain consistently above 98%. We take into account an inflation of 1.9%, annual investments of 200 million, and the cost of debt will remain under control, under 2.5%, at least until 2027. And as already promised, the operation margin has to come down again due to the significant increase. Let's not forget 30% GLA increase over the next 2 years. That is our ambition. If we put this in a graph, you get these exciting figures. Just one word on ESG. Well, basically, there's not so much I can tell you. You know our ambitions. Significant CO2 reduction on both our projects as our portfolio, 55% by 2030 and net zero by 2050. But basically, we are now gathering all the information from our tenants in January and February on what has been the consumption in 23. So we don't have those figures yet, but they will be in the annual report. So there you will get a view on where we are today on these targets, where do we stand. So that's a little surprise still to come for the annual report. This being said, SBPR Gold Award 77%, which is stable for the GRESB. We will improve that later on this year. The Sustainalytics score came down from 70.5 to 11, which gave us a place in the how is it called again?
Well, ESG.
ESG. Thank you very much. Yeah, indeed. So we are now one of the 20 companies listed companies with the lowest environmental impact. So we're quite proud of that result. On construction, obviously, you know our blue label, but I think it is also important to mention here, and I think we don't mention it enough, that on all the projects we are now that we have put in the in the development plan 24-25, all of them, except one, have the ambition to have at least the BREEAM Excellent, and some of them even the BREEAM Outstanding recognition. So we are quite ambitious on our own targets, and of course these that you know most of them. It's not only about techniques, it's also about biodiversity. It's also about well-being of the people who work in our buildings. We will continue to do that, and we will also communicate on those ambitions. As I said, we have built our teams. We've invested in our teams. We've invested in the countries, in business development. We have our own team in Germany. We have our own team in France. And I'm really convinced that in all of these markets, you will see standing investments over 2024. At least it is our ambition. And as I said, we also invested in the corporate services, investor relations, tax, marketing, communication, sustainability, all of these services. They are now in place. We are really equipped and staffed to do this development based on these great teams. Last but not least, governance. We have the green governance, which means that there is a sustainable executive committee that examines if the funds that are raised in the green finance framework are used or allocated to sustainable investment projects, and 30% of the variable remuneration of the senior management is linked to ESG targets. We see today that people are following there. I think we were the first to put the bar at 30%. So we're quite proud, and we think it's about putting your money where your mouth is. That's how you say it, I think. So we really want this to be part of the DNA of the company. This being said, at the end of my presentation, I would like to thank you all for following the presentation. I'm looking forward to your questions. I think with this, we laid down a beautiful year. We're quite proud of the results, and we look forward to 2024. And of course, we look forward to your questions. Thank you very much.